Okay, there's a simple formula to make money with my work, and it is setup plus trigger equals trade entry, and then you manage it. So we're going to go over that process with the example in NVDA. I gave everybody these levels in advance. Okay, they were posted on Twitter, they were posted in my end of day update and all that good stuff. And that was the setup. Okay, we wanted to watch for ideally a symmetrical pullback for another buy entry after we met key extensions on the upside in NVDA. And we got such a pullback. Now, I didn't have one area only, I had a few areas that I was going to look at, but what's important is that you wait for a trigger that tells you that it's worth placing a bet. So what happened was we did end up holding on top of one of the key zones, 167.54 to 170.38. And at the same time, we also had some timing factors coming in. Okay, so here you can see we had a couple of dates, the 26th, 27th, actually out to the 29th, as far as anticipating a possible low with this key support that we saw. So setup was the first part of the formula. Trigger. Okay, so the first trigger for a swing trade entry came in on the 15-minute chart. Now this one would have been a little bit scary because you had the 834 EMA crossover where you also took out a prior swing high, and at that point you were allowed to buy NVDA and place a stop underneath this last low, and it looked like it was almost going to be stopped out. Okay, but it ended up holding up and your risk was down here, right? If you look at the 30-minute chart, which is the not so aggressive swing trade trigger, where did that fire off? Well, that fired off when we both had the moving average crossover, and then you also have to look to the left and make sure that it took out a prior swing high in the process, because you want to see a pattern shift from, you know, the older bearish pattern of lower lows and lower highs to higher highs and higher lows. So you had that trigger basically over here. Okay, so there were two triggers that would have told you to look at an entry in this one. And what do you do next? Well, setup, trigger. So you had the trigger, that's the entry, and then you want to manage it. So what is management? Well, management is, first of all, where's your initial stop? The initial stop was either underneath this low or underneath the low end of the zone. You get to make that choice when you write up your own trading plan. Okay, and then what about other management? Well, then the rest of the management besides the initial stop would be to then get to a break-even stop when possible. Like, it's probably possible to get to a break-even at this point. And then how are you going to trail a stop? Because ultimately I know that this is where your risk is defined, but I don't know if we're definitely going to make the target. I do have a target up at 196.92. Okay, so that would be wonderful if we do, you know, hold this bullish pattern where you pull back and you extend and you pull back and you extend. But just in case we don't extend to that target, you know, it's a really good idea to at least have a break-even stop. So, you know, those are the steps to make money with my work. Setup plus trigger, that gives you your trade entry, and then you manage it, which means the initial stop, then a break-even stop, and then how are you going to trail it? And also, are you just going to exit the market with a trailing stop, or maybe you're going to book partial profits at an extension and then try and keep the balance for what we might get as far as a continued rally?